These scenes have been the order of the day in Queensland in northeast Australia for weeks now. Flood damage has also hit the country's mines. The world's biggest miner, BHP Billiton, says its operations will be affected for at least 6 months.
Australia is the world's largest coal exporter by a decent margin, especially on met coal. Australia exports 60% of the world's metallurgical coal, and the majority of that comes from Queensland. Queensland's a huge area. It's much larger than, say, Germany, France put together. Most of that's underwater. So on the met side, which is mainly steel making, Australia is a big, big factor. And I see $125 a ton out of Richards Bay FOB. And that's the highest we've seen since that spike in 2008. And before that spike in 2008, Chris, we didn't see anything like this, except maybe back in the mid-70s. So I see these as approaching those two real dramatic spikes, and it's getting very close to there. Those spikes were both temporary, the previous ones. I see this one temporary as well.
Australia supplies metallurgical coal to South Africa. Like many countries, it is seeing rising prices and fears of a shortage.
Domestically, there looks like we are going to see some domestic shortages of coal. And remember, there is a domestic market for about 20 million tonnes a year that's sold to everyone from breweries to paper mills to sugar mills to cement factories. They buy the same sort of coal we export. And if export prices are very good, we see those users of coal pressed. Some time ago, in 2008, for example, we saw the cement producers complain bitterly that they were having to pay much more for the coal they were using in their kilns. And we might well return to that situation where industrial users of coal in South Africa see higher prices.
There is likely to be more competition for coal this year. South Africa produces around 250 million tonnes of coal a year. In 2010, just over 63 million tonnes was exported. A third of this coal went to the power stations of India. Eskom burns just over 120 million tonnes, a lot of it poor quality, reducing power output. Eskom wants to keep more quality thermal coal at home and is calling for regulation to restrict exports.
Coal is an issue for South Africa. We have enough coal. We just have to mine it and open up the mines. And secondly, quality of coal is an issue. It's a real issue that we struggle with, and it can be a real solution, part of a solution in keeping the lights on over the next few years. And certainly we believe that as a country we need to find a mechanism to create a balance between supporting the continued export of coal in the economy and earning foreign revenue from that perspective and seeing the mining companies investing, as well as supporting power generation where we can use this resource that we have.
Eskom suggests exports should be earned by coal mines. 1 tonne of export in return for every 2 tonnes supplied to Eskom. But in this still free market, when you look at the prices, the economics are on the side of the exports. Eskom, which needs to keep power costs down, buys its coal for around $30 a tonne. Spot prices for export coal are around $125 a tonne. Incentive for big exporters to send more to the power stations of India, leading to calls for Eskom to increase prices.
Eskom simply has to pay the price that attracts the capital to build the mines. An argument on regulation only works on existing supply. Clearly, where the capital has already been sunk, it can't go anywhere else. My concern is when we need to attract new capital, and South Africa has always attracted its mining capital from abroad. When foreign investors get an opportunity to consider opportunities around the world and they sit with a list of projects, why would they choose a project in South Africa with an uncertain regulatory environment relative to a project elsewhere in the world, be it a copper mine in Chile or an iron ore mine in Brazil? So that's I think when the crunch will come, when we have to attract new capital to develop new mines.
Hilary Joffe, a spokesperson for Eskom, told CNBC Africa, "We can't comment at this stage on the comment that the prices Eskom pays for coal are not high enough to encourage investment in mines." CNBC Africa understands a number of South African coal suppliers are putting contracts with Eskom on hold for now. But getting the coal to export is also a problem. The coal line stretches 600 kilometres from Ogies in the heart of the Witbank coalfields to Richards Bay Coal Terminal. It is plagued by derailments. A former senior engineer on the line told CNBC Africa there was a lack of locomotive maintenance. poor engineering skills, poor track condition on the 30-year-old line, and problems with locomotive operations, that is driving. Transnet Freight Rail dismisses these allegations and counters that it is spending $2 billion on increasing the capacity of the line to 81 million tonnes by 2015.
Able's really the operative word there, because this rail line proved itself 15, 20 years ago that it could move 70, 71 million tonnes a year. Now it's only moving 62, 63. Big, good question. Is that rail line able to move this? I think it is. And we've had a lot of Transnet people say this line can now move 70, 75 million tonnes a year, but the mines aren't giving us the contracts. So I think that's where we've got to bore down. Are the mines not giving them the contracts? Is it because Transnet wants them to sign such an onerous offtake agreement? I'm hearing stories, they want them to sign, guaranteed you will give us this many tons for 20 years. And boy, if you don't, penalties are extreme. So I think Transnet can move 70 to 75. Maybe government's telling them don't give out easier to meet contracts, because Eskom needs to get the coal.
This year, it is clear that coal around the world is likely to be more sought after and more expensive. 2011 promises interesting times, as the Chinese say, for the South African coal industry. And don't forget, in a few months' time, the industry faces a massive increase in costs when tens of thousands of coal miners will negotiate a new 2-year wage deal.